Good evening, all. It's Sunday night. This is Shea Horowitz, ShogunTrading.com. Hope you had a great weekend. The market is back on tomorrow. S&P 500 came back to support that 882 level. This is something we've been talking about for quite a while, the market coming back to support. And we had kind of a flat week, basically. Not a whole lot of up, not a whole lot of down. We tried the downside, we tried the short side, but no great momentum yet. Here's the breakdown, here's a bounce, here's a breakdown, and notice on Friday we didn't really break below it. Now, there's a certain concept that's very unique to the short side that we don't find on the long side, and that is that the market has to be ready, has to have the stomach for the short side. It's not quite an even direction with the long side. The market actually has to feel that the waters are safe before they jump in. That they'll test the water, and unless they feel it's safe, they won't jump in. One of the reasons why our market is up off the bottom, off the 666 level as much as it is because of lack of short sellers. Here's a chart. You can see from beginning of March how we went up and we went up and went up. And you don't really see pullbacks. And there's a reason why you don't see pullbacks, because the short sellers went away. The short sellers felt that it was unsafe for them to short because the administration would come up with new rules and new regulations on a daily basis. There was always a press conference every day. Bernanke, Geithner, or Obama would come on and would give a different presentation, different press conference. And that's why the market went up for so long. Now, the short sellers stepped away because they were scared. Now, in order for the market to come back down, the short sellers have to come back. Now, go read the book Reminiscences of a Stock Operator. This is really a trading classic. And it talks about this gentleman that's a great trader, and he guessed the top of the market, and he knew that the market needs to come down from a fundamental reason. The market needed to come down, and he went short, and he went short, and he went short, and he went short, and he went broke because the market didn't go down. The market only went down after he was done shorting. After he went broke, the market actually gave up. It's not enough to say, okay, the market is going down. The market has to be ready for it. You can't be the only one that's going short. Now, our plan for this week is to see if the market is ready to go on the short side. What's it going to tell us? The market needs to start breaking down. We need to see momentum. We need to see volume. We need to see aggressiveness on the short side before we say that the market is actually ready for the short side. That's something we're going to see this week. If we do see it, our plan is to go short. Now, there are two reasons to go short. One of them is for profit, and that's something that everybody knows. But it's also something that's very difficult for most people to go short because they feel that it's unpatriotic to go short. But there's another reason to go short. And here, I'll show you real quick. We're going to go into daily chart. And you can see the S&P 500, we're up to 1,500, and then we came down and so on, right? Now, I am sure most of you own real estate. Now, if real estate prices start diving again, not just real estate prices of residential, but real estate prices of commercial, you want to hedge yourself. And you hedge yourself by this one. This one is the Ultra Short Real Estate ProShares ETF. This is an ETF that used to be around the $260 level and now is sitting around $24. If the next shoe drops, if real estate prices, especially the commercial real estate prices, if that bubble collapses as well, if we start seeing problems in the commercial real estate, then this would be a great ETF for you to own because it's an ultra short, it's a double real estate. So if real estate starts coming down, this one will go up twice as fast as real estate comes down. Real estate stocks, and we'll talk about real estate investment trust, REITs. So this one would work out extremely well. Then the other one that I want to show you is FAZ. FAZ is the triple short. It's a financial bear 3 times shares. And this one, if we start seeing the banks start to come down, then this one will work out extremely well for us as well. I don't think they're quite ready. I don't think the market itself is quite ready to come down. But these are definitely a good stocks to either you want to profit off the market coming down or you want to hedge against other assets that come down. Now, from a fundamental reason, I don't have to tell you that the economy is having a rough time right now and that the next shoe is about to fall if there was any time of that. I'm seeing a lot of the smaller banks that are having problems right now. And they're not on live support like the larger banks. See, the whole thing about the larger banks right now doing okay, and they're not doing okay because we just had the stress test, is they're on live support. They're not independent banks. But some of the smaller banks are independent banks, and they might have some problems. So I'm not saying go short. I'm saying wait for the market to show momentum on the short on the downside, and if the market shows downside momentum and we start seeing that the market starts coming down, these two would be a great hedge for you on the way down. That's what I'm saying about that. Now we had POT. POT is the stock that I gave you last week. I gave you that one on Sunday. Look it up. And you will see that we called 97.67. It went up to 110.75. Now, it's not a tremendous amount of profit. It's only $13 in a week, but it was quite nice, especially when the market itself was actually going down for the past week. So while the market is going down, this one was actually going up, and it was extremely nice. One more thing about the stock is that the options on this stock, the 100 calls, actually went up 800%. They went up 800% in 1 week. And some of you wrote me letters saying that you enjoyed it and you liked it and you profited off it, and I'm really, really glad with that. I am going to release a free stock pick on a weekly basis unless I can find one. Right now, I think the market is kind of in limbo, so that's why I'm not releasing any stock picks right now. I gave you two ETFs, SRS and FAZ, in case the market starts coming down, so you have something to do if the market starts coming down. I don't think it's quite ready for it, but when it is ready for it, I plan on calling a trade. So it's probably going to be next week, so stay tuned for next week. Our daily newsletter is ready with some short-term shorts right now, so if the market does come down for the short term, they will have trades on the short term. Our plan is very simple. If the market is sitting on top of support, if it breaks, we go short. If it doesn't, we'll go back into our long side. We'll go back into establishing more on the long side. Anyway, that's all I have for you for this week. I hope you enjoy it. I hope you enjoy this week. I hope you are going to hedge yourself in case the market starts coming down again. I hope you will profit from the market coming down again. I hope it will offset losses in other areas, and I hope it will offset it and actually give you a profit off of it. Have a great week, and I'll talk to you tomorrow. Take care.